And welcome back, it's Jason Walter here. I noted that Redfin posted last week a very interesting article. In this article, they stated basically that this housing market slowdown is starting to slow down or level off. So I'm going to give you some insights regarding this because I'm going to share what they're tracking right now. And also I'm going to give you my honest opinion about, is this housing market slowdown we're seeing right now starting to level off? So with that said, let's go ahead and dive right into the video. Hope you guys get a lot of value in today's video, of course. And if you do, please hit the like button. I greatly appreciate that. So with that said, let's go ahead and dive right into the video here. This was just published on the 18th of August. And again, they're seeing some metrics that they're tracking that's basically saying that this housing market slowdown is slowing down. It says here that fewer homeowners are listing their houses for sale. So new listings are actually down 14% compared to 1 year ago. And this is hampering the growth in housing supply. So what we have been seeing is a lack of housing demand over the past several months. Basically starting ever since about April this year. And this decrease of home buying demand has caused an increase of housing supply. In other words, it's taking longer for houses to sell, and also signed contracts between a home buyer and home seller have also been decreasing. And that has caused housing supply to increase. However, we're seeing a decrease of new listings over the past several months now, and this is causing a slowdown in our housing market slowdown, for lack of a better word. In other words, what Redfin is saying here is that this housing market is leveling off or easing up. And as Redfin notes here, the number of houses for sale, in other words, housing supply, for the 4 weeks ending August 14th fell slightly from the prior 4-week period, and this is actually the first decline since the start of this year. Now think about this. This is the first decrease of housing supply this year, which is pretty astonishing. And this is because, or one of the main reasons because of this, is because new listings actually plummeted 14% compared to 1 year ago, the largest annual drop since June 2020. And because we're seeing this decrease of new listings hitting the market, again, down 14% compared to 1 year ago, home sellers who are listing their houses for sale are seeing fewer competition amongst other home sellers. In other words, this is causing potentially a plateauing of the share of listings with price reductions. Additionally, Redfin notes here that following months of declines, the share of houses selling within 1 week has leveled off at around 25%. Another sign this housing market slowdown is easing. And according to Deputy Chief Economist at Redfin, Taylor Marr, he had this to say: many homeowners have been reluctant to put their houses up for sale during a housing market slowdown, which is now holding back inventory growth. This means that home buyers have fewer houses to choose from and may lose some of their newfound bargaining power. And stay tuned regarding that because I'm going to share the latest trends we have for new listings, pending home sales, as well as active listing inventory, and of course, home prices as well. Let's first talk about some early indicators of home buying activity, or some leading indicators of home buying activity. The seasonally adjusted Redfin Home Buying Demand Index, which of course is a measure of requests for home tours and other home buying services from Redfin agents, was down 14% year over year during this 4-week period ending August 14th. On top of that, touring activity is down as well, according to Showing Time, for example. They talk about it being down 5% compared to the start of this year, but it's actually worse than that. Have a look at this. The 7-day average as of August 23rd of this year, the number of home tours across North America is actually down 6.4% compared to the first week of this year. Compare that to last year, we were actually up 11.1% compared to the first week in 2021. And as you can see in this chart right here, the number of home tours across North America has basically been flat over the past several weeks here. So for the past several weeks right here, as you can see, the number of home tours has basically been flat, whereas in 2021, it actually was going down slightly. Is this a sign that home buying demand is leveling off? Well, let's have a look at some other metrics though to find out. Redfin also noted that mortgage purchase applications actually fell 18% compared to 1 year ago, but this is for the week ending August 12th. The most recent trends we have, was actually published today though, actually made a separate video regarding this, but I'll lightly touch on this. This is for the week ending August 19th. The purchase index, which of course is a measure of people submitting loan applications for home purchases, was down 21% compared to 1 year ago. Another early indicator of home buying activity is due to a huge decrease of new home sales, as I mentioned in my previous video that I published a couple of days ago. So new home sales decreased by 12.6% compared to 1 month ago, but actually plummeted almost 30% compared to July of 2021. In fact, the annualized rate for new home sales across the United States at 511,000 as of July of this year is actually the lowest levels since January of 2016. Also, as I mentioned in my previous video here, pending home sales actually fell 19.9% compared to 1 year ago. And the current levels of contracts being signed, according to the National Association of Realtors, if you actually exclude April 2020, we're at the lowest levels since September of 2011. Okay, let's change gears slightly and talk about home prices across the United States, at least for 400 plus US metros that Redfin tracks for the 4 weeks ending August 14th of this year. So the median sold price was at $373,750. That's up only 7% compared to 1 year ago. Also, prices have declined 5.5% from the record high of just under $400,000 that was set in June 19th of this year. And interesting enough, there was only 2 metro areas that saw decreases in the median sold price compared to 1 year ago. Those are both in the Bay Area of California. That was in Oakland as well as San Francisco. So in Oakland, home prices fell 1.5%, and in San Francisco, prices slid by 2.8%, and the median sold price there was just under $1.5 million. Meanwhile, the median asking price for newly listed houses increased 11% from a year ago to $385,000. But asking prices are down 4.7% from the all-time record highs. And here's 2 charts I want to share regarding home prices across the United States here. As you can see here, ever since June, the median sold price, again a lagging indicator, has been falling. We're up 6.8% year over year, but this is much lower compared to the 15 to 20% gains that we saw earlier this year. Also, as you guys can see right here, this trend line going down is far different than we saw in 2021 and also in 2020. You can see that here when looking at asking prices as well. Again, up 10.5% year over year. Asking prices have been more or less declining ever since May. This is definitely different compared to 2021 because basically from May all the way until November, asking prices were basically flat. But ever since May of this year, asking prices have been coming down. Also, the average monthly mortgage payment on basically the average price home in America right now is up 34.8% from 1 year ago. This has been increasing greatly ever since January, but ever since basically the middle of June, this has been more or less declining. This is because the average 30-year fixed rate mortgage basically surpassed 6.4% in mid-June. But since then, mortgage rates have been more or less declining through August 14th of this year. In regards to pending home sales, new listings, and active listings, which of course are housing inventory, have a look at this. Pending home sales are actually down 17% year over year, according to Redfin, for the 4 weeks ending August 14th of this year. But new listings, again, are down 14% compared to 1 year ago, the largest decline since June of 2020. Active listings, which of course is housing inventory, fell 0.2% from the prior 4-week period, the first decline since the 4 weeks ending January 30th of this year. Also, compared to 1 year ago, active listings rose by 4%. And here's a chart showing pending home sales compared to 2020 as well as 2021. This is 2020 right here in gray. The blue line right here is 2021. Again, down 17% compared to 1 year ago. But as you can see here, ever since July, pendings have been more or less plateauing or leveling off. This is going to be an interesting trend to follow though, because if this trend line starts to decrease again, that's going to show us that home buying demand is decreasing again, right? But if this trend line continues to go up, or if it does go up, that would show us that home buying demand is increasing. And again, like I mentioned in my previous video, I'll definitely keep you posted regarding this because this is a very important metric to track in order to gauge the future of our housing market. And meanwhile, new listings have been absolutely plummeting, down 13.6% compared to 1 year ago. They basically have been decreasing greatly ever since June or July of this year. And this is one reason why we're not seeing this giant increase of active listings right now. If we were to see new listings absolutely shoot up greatly, and also a huge pullback in pending home sales, that would cause active listings or housing supply to increase greatly, which would really impact our housing market. But as I've mentioned in previous videos here, new listings have been falling down, which is one reason we're not seeing a housing market crash. But because new listings have fallen greatly over the past several months now, we're starting to see this softening in growth of new active listings or housing supply. As you can see right here, this has been increasing greatly ever since basically May of this year. But as you can see here, ever since basically June and July, this has been softening and basically plateauing over the past couple weeks here. So one thing I want to mention regarding these stats here, these are very short-term trends, right? So we have 1 week where basically we have a plateauing of active listings. Also for pending home sales, this is also a very short-term trend we're seeing right now as well. So I would be very cautious to say that our housing market slowdown is slowing down, because this is basically short-term trends. Let's not make long-term projections based on those. Other short-term trends we're seeing right now, and something we should be following over the next several weeks here, and I'll definitely make videos regarding this, is about 37% of pending home sales went under contract within the first 2 weeks. As you can see right here, for the past week or two, this is basically plateauing as well. In addition, approximately 25% of pending home sales went under contract within 1 week. In other words, home sellers sold their houses very, very quickly. This is actually fewer compared to the previous 2 years though, because back in 2021 and 2020, that share was basically 30%. And again, a very short-term trend. We'll have to see how this changes over the next several months. Meanwhile, houses that are priced right are still selling very quickly though, but slower compared to 1 year ago. So the median days in the market is 23 days. 1 year ago in 2021 at this time, it was around 20 days. Additionally, around 41% of houses that sold during this time frame here sold above the seller's asking price. About 40.6% to be exact. Compared to this time last year, that share was actually over 50%. Also, the share of price drops is at 7.7% right now. This is actually the first time this has leveled off in several months now, because ever since basically April, the share of price reductions has basically been skyrocketing. But more recently though, this has been leveling off. Again, a very short-term trend. We'll have to see if this trend continues. And despite this slowdown in the share of price reductions, this is still an all-time record high, going back to at least 2015 when Redfin started tracking this data here. At 7.7%, the previous record high before 2022 was basically in October of 2019 at 5.1%. And meanwhile, the average home sold for 100.3% of the list price. In other words, on average, for the houses that sold within this time frame here, houses sold for 0.3% over the seller's asking price, which is a lot less compared to 2021 this time, because in 2021 this time, it was actually over 101%. So comment below with your biggest takeaways from today's video. My biggest takeaway is that this is very short-term trends. We're looking at 1 or 2 weeks of data and making long-term projections, or basically saying this is an early sign that the housing market is leveling off. I would say that we have to see more data in order to make more predictions for the future. What do you guys think though? Leave me a comment below. Also, if you guys got any value at today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day, and I look forward to seeing you on the next video.